Good evening. It's been a sluggish day for European stock markets in the absence of any major scheduled company or macroeconomic news. The UK blue chips opened today on a very flat note following uninspiring trade in US and Asian markets. But according to a report from the Statistics Office, sales in the UK dropped 1% last month. British retailers posted their worst December sales since 1981, led by declines in clothing shops and departmental store, even as price cuts failed to lure consumers. But in France, Europe's third largest economy, consumer spending rose unexpectedly, reflecting discounts and one-time government measures to lift consumption. For more on that and other market trends, we're joined in the studio by Gerald Perez, MD Interactive Brokers. Hi Jerry, welcome to the show.
Thank you for having me.
Negative sentiment then on European stock markets. Well, it's just relatively gone up in the CAC 40 and FTSE, but it's been depressed all day. Why is that?
If we look at the sectors, starting with CAC 40, for example, today was expiration on the CAC 40 future. We had very low volume compared to a year ago. We're off about 10,000 contracts. Volatility is at a low right now at 12.8%. A year ago, 16.6%. Most of that market or the investors are being dictated by the United States markets. They're watching the dollar. They're watching other sentiments, earnings, for example. If we go on now to the DAX 40 future, the DAX index future, we've also had a slow day there, although it did recover before we went on to the show as the DAX future was up 7 or 8 points compared to the CAC 40 as well.
Sorry to interrupt you a little bit. But we saw today that in France, consumer spending, was at a high. But at the same time, we have conflicting figures that there's unemployment levels have gone up by 10% in France. And in the UK, consumer spending is at an all-time low. So would you say, European markets are not the best place for investment, and maybe emerging markets are where we should be looking?
Well, currently it looks like the European markets, more individuals and investors are looking abroad with respect to the U.S. markets, the recovery of the U.S. dollars. There is significant outlook for emerging markets, moreover China and India, as these two markets have progressively brought in a lot of strong optimism.
Right. If you look at the FTSE, we've had top results from Chorus, which is Britain's largest steel producer. Now, obviously, they've done really well because of increased demand from China. Is, for instance, something like manufacturing, is it still emerging markets that are the main markets for core products like steel, or is Europe going to be, exports to other European countries is also likely?
I agree with that statement. If you look, for example, at China, India, China specifically, their economy has been increasing by 10%, and they've been keen on the manufacturing sector. So international companies are definitely setting up operations there. If you look at India at 6%, they're also looking at the Indian market, not only because of the language, as well as Dr. Xin's appointment, head of governance. There's a lot of optimism on how he's going to ratify or reform certain practices.
And what about, the retail sector, for instance? We've seen Marks & Spencer, one of the retail giants, hasn't done well in European markets, but a lot of retail giants like Tesco's done really well in non-European countries. So do you see retail sales also moving to emerging countries?
I think as a CEO of a company, you have to start looking abroad. The emerging markets, it's such a huge populace of new consumers. Therefore, you'll see companies in the United Kingdom as well as in the United States starting to set up operations, but not necessarily directly, but indirectly by having collaborations. This is such an important pool for the CEOs, return on their investments, that you do see that coming up very shortly.
Right, Mr. Perez?
I think Delhi studio in Delhi has a question for you down the line.
Yes,
Mr. Perez, just one thing which has been playing on all of our minds here in India for the last couple of weeks, of course, some of these inter-family disputes and tussles that are taking place. I'm not sure if you've had a chance to track them. I was just wondering, in Europe, do you still have lots of family managed businesses, and are there different valuations that you give to them?
In Europe, you do not see as many family-oriented companies. As a matter of fact, in the last 5 years, more companies have been diversified. They've gone over to different areas in the public sector specifically. So it's more of an India issue than it is in Europe in the last 5 years.
So you mean to say that in Europe you wouldn't tend to be worried about, fights, tussles, splits, brothers fighting with each other? That doesn't seem to be too much of an issue in more developed markets. Is that what you're saying?
Yes, but historically, if you look at it, when there's infighting in a company that's dominated by families, it's not necessarily a bad thing. Rather, it is a sign that there's change coming, and sometimes that change is for the positive side. Therefore, if these Indian families are fighting within internally, it's not necessarily bad, but it could be positive as change is coming, and that's good for the shareholder.
Gerald, to take up on that, Vikram's question, I mean, are these issues that actually put off foreign investors? The fact that there are family-owned businesses, the fact that there are regulations that keep changing, and the taxes on which may be imposed on investments.
I believe regulation is one of the important factors as a CEO looking into doing business in India. With respect that it's family-orientated, that's not necessarily bad. Again, if you have all the power concentration with a select board member or a CEO, that actually could work better to have the collaborations. When you have a supervisory board that is a little bit more decentralized, it's more difficult to come with an accord or to find an answer relatively soon. So in a way, that's actually positive.
So how attractive is India right now as a investment destination? Is it better than China?
China's been growing at 10% versus India at 6%. Some of the issues that probably have the dispersity of the 4% is regulation, infrastructure, but there's a lot of optimism with Dr. Singh now taking the emerging governance and change of the regulation. He is seen as one of the best economists in the world. The change not only in cities like Bangalore, but in New Delhi are obviously transparent to the UK, European, and US investor. So I think for the most part in the next 6 or 7 months, you're going to see the disparity between the growth of China and India decrease to 2 percentage points.
And what is the advantage? I mean, if looking at it from a UK point of view, there's been a lot of protest against outsourcing, saying that, there's rising unemployment here. Now, do you see that stepping up and have companies like HSBC who have a lot of offshoring, back offices in India, do they actually perform better than other companies who don't do that?
Well, it definitely decreases the cost for the company when we have low consumer confidence in spending. Obviously, companies have to reinvent themselves by outsourcing to India back office operations as well as some call centers. That's had the company to sustain having good profits or static profits. But if you look at the phenomenon in the United States in the 80s to the late 89 year, you lost something in the neighborhood of you created 72 million new jobs, you lost 28 million. In the short term, it's very bad headlines for the political governance of the country, but in the long term, you created 44 million jobs. That same thing here in the United Kingdom. By outsourcing, it's not relatively bad, but in the long term, it usually historically turns out to be better.
Right. Let's look at the way world currencies have been performing. I mean, we've seen that the U.S. has the U.S. dollar is now at a 2-month high against the euro, and it's up against the yen as well. What's your opinion on the dollar? Is it overinflated in terms of?
Well, there was a lot of pundits claiming that by this time we would have the dollar to the sterling at 230. Obviously, that's not the case. I believe a lot has to do with the Bush administration currently looking at providing tax breaks for companies that have expatriated money and now bringing it back to the United States. In addition, housing starts are starting to increase and job claims are starting to decrease. Those three factors have given a lot of confidence to U.S. markets, but moreover, I believe the tax legislation that's now in Congress is very important for the dollar sustaining their levels.
You mentioned a very interesting point that the U.S. government's introduced this sort of tax holiday for companies, and they're allowing them to repatriate large sums of their foreign incomes. Now, do you see that actually working towards in favor of the value of the dollar? Is going to push it up?
I believe it will be in favor of the dollar because there will be more sectors looking at that. If companies are trying to create or send money abroad, obviously it's not as easy as it may sound in the headlines. Therefore, companies are now reinvesting in the United States, and that's very important.
Oh, and what about the sterling? I mean, it's been outside the Eurozone and it's done really well in comparison to its neighbors. Where do you see the sterling in the next few months?
Well, I think sterling is one of the most strongest currencies in the world, specifically in Europe, compared to the euro.
Why
It's
is that?
sustained its growth. I believe that Gordon Brown's economic policy is very disciplined and it's paid off. You may see bad headline news, but at the end, the consumer is obviously very confident as well as foreign investors. Therefore, with the discipline that the Gordon Brown has in place, you're going to see the sterling perform probably better than the euro in the next coming months.
Jerry, I think Delhi has a question for you. Vikram?
Sure. Yeah, Ms. Perez, just one more thing. I'm just trying to sort of relate to some of the things that have really been making the headlines out here. We've seen cigarette stocks in India reaching all-time highs in the last couple of days, policy issues and all of that. I'm just curious again that in markets like Europe, is there a substantial risk premium attached to cigarette stocks, just as there might be to family-run businesses? Is there a lot of risk premium? I mean, would you, for example, not touch cigarette stocks just because of what regulation might be like 5-10 years down the line?
Yes, there's a certain level of skepticism because of regulation in any country, but regulation in India, for example, is something that most foreign investors have acute knowledge before it actually occurs. Therefore, you already see that in the price of the share. So you'll see foreign investors, foreign companies already calculating that in the valuation of the stock. So regulation is not that of importance.
Right. Well, thanks for that view, and that's certainly something that we're going to keep in mind. Sucharta, final words from you?
Jerry, I mean, the LSE has now set up this platform where they're getting a lot of Indian companies to register with them. Why are Indian companies so attractive?
Well, I believe it has a lot to do with the expats. The Indian investor demographically that's an expat strongly wants to invest in the United Kingdom, specifically in the London Stock Exchange. You'll see them invest in the GDRs. As a matter of fact, you can't go to any investment show or you can't deal with any outside investor without coming across 2 out of the 5 being expats from India. Therefore, there's a strong confidence from the Indian demographic investor to invest in the LSE products.
Just a quick, question on why is the Indian investor so attractive to global brokers?
I believe international brokers look at this demographic investor as one of the turning points of creating larger margins, and the reason why is if you look at the Indian investor, they're definitely more IT literate than the typical investor from other countries. They are also very financial and investor savvy, and English. English is well spoken, so when the expat comes into the European or international marketplace, he's already well versed in the international language of English. And in addition, you see the Indian market lending itself to derivatives trading, where if you see an expat from other countries like Russia, China, you'll see them more invest in equities alone. But with the investor being so savvy in derivatives as well as equities from India, it's extremely attractive to international brokers like ourselves.
And do you see a lot of Indians actually investing in European stocks and shares? Is the information easily, given out to them? How do they access information now?
I believe you'll see more international brokers creating operations in India itself. They'll also have collaborations with Indian firms. They're making it a lot easier. They're having teams specifically going for that small community. And it's very important, and you do see the investor come in quite literally faster than any other expat.
Thank you for being with us today.
Well, thank you very much for having me.
So towards the end of the trading today, European stocks declined for a second day, led by retailers, as a government report showed UK stores posted their worst December sales since 1981. That's the update from London. Thank you for watching. Good night.